Thank you for joining us for today's webinar where we will be discussing student loans. This webinar is being recorded. All attendees will receive a follow-up email with today's recording and presentation deck within a week. All participants have been muted, so please use the Q&A box for any questions. Your presenter today is Jeff Lackey. He is the Director of Relationship Management at Sallie Mae. And with that, I'd like to now hand it off to Jeff. Welcome, Jeff.
All right, thank you, Lena, and good morning and good afternoon to any of those that are outside the Pacific time zone. Thank you, Lena. My name is Jeff Lackey. I am with Sallie Mae. We are going to be discussing student loans as well as options to help pay the remaining balance on today's session. And so essentially what this will be doing is giving you an overview of the various different types of student loans that are available out there, as well as other funding options that could potentially help assist in what typically is called the gap of your financial aid. So essentially you've got the cost of attendance, you've got your billable charges, and then you may potentially have financial aid you've received from the school, but yet you still need more in order to make it, all of your expenses. That is what's typically called the gap. And so essentially we'll be discussing the remaining balance or the gap along with the understanding student loans portion, because at many times the student loan portion is what is going to be filling that gap. So they tend to go hand in hand. So with that, let's go ahead and move on. What you'll be learning today. Today, we are going to be talking about the Paying for College Basics. We'll do a quick overview as to how financial aid works. And again, it's a very high overview. We're not going to be spending a tremendous amount of time on it. We will explore the student loan options, since today that is what the main topic will be. We will be talking, as we mentioned, how to fund the remaining balance, as well as tips and recommendations for you to think about. So basically, again, it's just some ideas. Certainly you're not bound or required to do any of these. It's just something for you to think about. So let's go ahead and jump into the Paying for College Basics. The question on everybody's mind is, well, how much does this cost? We hear about it in the news all the time. We hear about enrollments, we hear about the cost of education, what have you. The four numbers that you see, the $4 amounts that you see on the screen right here, these numbers might not necessarily be numbers that you automatically thought about when you were looking at the various different types of colleges or universities that are representative of the quadrants you see here. We hear a lot about public community colleges, two-year community colleges being one of the most affordable options of higher education out there, but yet it has a sticker or a number price here of $19,230. The reason why we are showing these numbers to you is that these are what many believe in the industry, in the financial aid profession. This includes federal government as well as financial aid industry professionals, as to what your expenses will be while you are attending the type of college that you see in each of these quadrants. This is not necessarily going to be the billable charges that the college or university essentially charges you for the costs that they are charging in regards for tuition and fees, or maybe other types of miscellaneous expenses. Those numbers will typically be smaller or lower than the numbers that you see here. The numbers represented on this screen are what are called a cost of attendance. And you can see at the bottom, the footnote states that this includes your tuition and your fees, which we will discuss in the next slide or so as to what a billable charge is. But it'll also take into account room and board, transportation, books and supplies, as well as other miscellaneous or personal expenses. And some of those obviously are going to be estimates. So when you look at these numbers here, again, this is not necessarily to scare you or say that this is, something that you need to necessarily plan for. It's really trying to take a snapshot of your lifestyle and again, at an estimate level of what the lifestyle would be like while you're attending school. And we'll talk about some of these billable charges here on the next slide. You can see here that colleges will have what are called direct costs, and they will also have indirect costs. The direct costs are exactly what we just mentioned. They're going to be what the school is billing you for, or essentially what is also called the billable charges. This can be tuition. Sometimes if you happen to be living on campus, it can be housing or rent and meal plans, room and board. It can also be all of the required fees, whether it's a health center fee, student activity lab fees. Sometimes there might be an ASB fee or something along those lines. Those will all be outlined in your bill, but they will probably have the word fee associated with them. Those are all charges that are directly billed to you. Your indirect costs or your indirect charges or non-billable charges are essentially the things that you are going to have to be reliant upon while you're attending school, but the school itself is not directly billing them for you. Your books and supplies, typically, yeah, you might be able to get a voucher for your books or something along those lines, but typically you've got to pay for these out of pocket. Any type of equipment, art supplies, computers, any type of lab fees, for instance, that are not included as a required fee. So let's say that there is certain things that you might need to bring in regards to a specific science class, for instance. Transportation and your personal living expenses. So, again, when you're thinking of personal living expenses, these are going to be toothbrushes, they're going to be toothpaste and such like that. I mean, anything that you would essentially be paying for as part of your lifestyle, but you're paying for them now because you're going to college, you're attending college. So those are your indirect costs, okay? But financial aid offices are allowed to build a cost of attendance that makes up both direct costs and indirect costs. And what they will do then is that they will try and award a financial aid offer to try and help meet most of the costs within the cost of attendance. And we'll show you exactly how that works here in a second. Along with that slide that we were talking about some of the prices of college, you may say, okay, well, I saw the 4 different quadrants there and I see them as a big group, but how do I get information about the actual colleges or universities that I'm interested in attending? Where would I find information about those? Well, right now, currently, the best apples to apples comparison that's out there is at a website called collegecost.ed.gov. And you can see it in the bottom there in the yellow bold print. This will allow for you, it's a federal website. It allows for you to do comparisons between specific colleges. And what it does is it actually provides information in regards to what previous students have received as far as financial aid. It shows some of the prices or the sticker price of what people have been, students have paid in the past. And it actually allows for you to get a better estimate as to what the actual costs will be while you're attending that particular school. Now, again, when you're looking at a school that has, thousands of students that are admitted either each and every year or all total over all 4 years or so, these are going to be the best estimates. And it's not necessarily going to pinpoint exactly right down to the dollar as to what your costs are going to be, but it is a much better representation of what you can expect to pay based on previous students' history at that particular school and what they qualified for from financial aid perspectives. Sallie Mae does a study each and every year along with Ipsos, and it's called our How America Pays for College. And one of the statistics that we like to break out just to let families and students know about where most of the funding comes from when you're exploring college costs and looking for ways to pay for higher education. You can see here within this graph that based on our How America Pays for College 2022 study, again done along with Ipsos, you can see that parent income and savings makes up 43% of most of the funding that comes for college. Student income savings makes up roughly 11%. So for those of you that were thinking, hey, you know what, we're just going to have to figure out a way to pay for this, we don't know exactly how we're going to do it, you can see that for some people this may be potentially their only funding source, but you can see that the funding source share is roughly a little over half of what students can potentially receive while attending a school. You can see that scholarships and grants is 26%. This number is actually going up. In years past, it's been a few percentage points lower. But with more information about scholarships, more information about grants, the ideology of, I don't qualify for grants, I don't qualify for scholarships, that misnomer out there is really hopefully getting suppressed, and it's allowing for students to think more outside the box of what scholarships are, who qualifies for them. And we're actually seeing more people qualify for scholarships, more people are applying for them, and they're finding out that they are scholarship material, and that scholarships can be given for a myriad of different reasons. So we do like to show that scholarships and grants are becoming more popular. And every dollar that you can receive in a scholarship or grant is less money that you have to borrow. And you can see down there in the yellow, student borrowing 10% and parent borrowing roughly 8%. You can see that over time, that with all the different resources that potentially are out there, especially scholarships and grants, we definitely want to make sure that people know about these first. Although, student loans are making up a decent sizable portion of higher education financing or funding. So with that, we always like to remind folks to make sure that you're starting, whenever you're looking or starting on your financial aid journey to help fund and finance college, to make sure that you're always starting with money you don't have to pay back. And that essentially, again, are the scholarships as well as grants. Grants are essentially monies, and they can come from various different sources that you are awarded. They may be directly from the federal government, they may be from a state, they may be from the institution. Typically, financial aid offices will do your determination for eligibility of grants. There's not a tremendous amount of research that you have to do for undergraduate grants. Again, that you'll primarily be awarded those or offered those based on analysis that's done in a financial aid office. But what you can do is look for scholarships, and we'll have a slide or two about scholarships coming up here in a second. Spending a lot of time looking for scholarships and such, all of that free money that you can qualify for first is a good thing to do. Second, if you've done all of that and you need to have more funding and financing, by filing the FAFSA, the free application for federal student assistance, which we'll talk about here in a second, that'll make you eligible for federal student loan options. And so certainly we'll talk about these, and you'll be able to understand a little bit more about them and find out if this is the source of loan funding that you are going to want to move forward with to help fund your education. And lastly, if you still need more funding on top of that, talking about different types of gap financing solutions, considering a responsible private student loan or maybe tuition payment plans might be the way to go to help fund that last portion of the gap. So what are scholarships? Again, scholarships is just free money that does not have to be paid back. So basically they are awarded by funders, donors, foundations. They are basically money that you can receive through an application process, and you are awarded or you win the scholarship based on a review committee or a foundation's determination of who best qualifies for the scholarship, whatever their requirements are. Because scholarships are offered by all these various different institutions, they can be available once a year. They can be available many times a year. They can set their own deadline dates. They can take a look and see if there's a program that's specific for you, and maybe you can qualify for it based on a program, or so they can be very specific. High school students can apply for scholarships. Usually in your junior or senior year, you can apply for scholarships all throughout your undergraduate years. You can apply for scholarships during your graduate years. There's never a time to stop looking for and potentially applying for scholarships during your higher education career. The scholarships, like I said, deadlines and all of that can change. You can be looking at a scholarship that's available one time a year. Maybe the donor opens it up multiple times a year. They may require essays. They may only ask for you to answer questions. They could be online. Sometimes they can even be in paper. And so, they vary quite widely. Scholarships, again, typically we think of them being merit-based. Okay, the only way that I can win a scholarship is because I'm a straight A student, or I was a captain of a sports team. They're the only individuals that ever win scholarships, right? Well, not necessarily. There are many scholarships out there available. They can be awarded on academic achievement as well as sports or a talent or skill, but they can also be awarded in part based on financial need. They can be awarded based on community involvement or organizational memberships. They can be awarded based on your leadership or your school activities. We've seen scholarships that are awarded based on ethnicities or religious affiliations. Sometimes scholarships can be awarded to a student based on the parent's affiliation with either where they are employed or maybe a particular club or membership that they are a part of, or maybe they are involved in certain activities. Dependents of these parents sometimes can apply for scholarships based on this information. And again, remember, scholarships do not require repayment, and they're typically awarded on an annual basis. And almost all the time, these scholarships and the scholarship applications ought to be free. You should not have to pay to fill out a scholarship application. Scholarship resources, they can be found. We've talked about scholarships a little bit here, but hey, where do I find them, right? They can be found in local or community-based scholarships. They can be supplied by federal and state agencies. Colleges and universities have a list of college-specific scholarships that they offer, and they may also have some community or local-based scholarships that have been made aware at their college or institution to help get the word out about the particular scholarship that they're offering. So definitely check, with your college financial aid office, check with college admissions, maybe even career development. Religious organizations can also have scholarships available. So if you happen to belong to a place of worship or whatnot, you can certainly check and see if this organization potentially has a scholarship available for its members or congregation. Employers are increasingly having scholarships available. And again, this can be both where you're employed, if you happen to be a student, or if you are a dependent student, it can also be where your parents are employed. So look both areas to see if scholarships are available. Libraries, public libraries are a good source to try and find information on scholarships because, again, the local and community-based scholarships are out there, but they may sometimes have trouble trying to figure out where they can get the most advertising of their scholarships available. So they typically will go to public areas. Libraries are a perfect source for that. It's a public area where many people congregate, and so therefore many local and community-based scholarships will ask libraries to have information about their scholarships available. Private organizations, major companies, again, are great places. And again, it doesn't necessarily mean that you have to be employed by a major company. Major companies may just offer scholarships for the community that they are in, or even for the region that they're in. Same thing for private organizations. So you can be looking online there, and there's other places that you can look to as well for these, but sometimes researching major companies for a scholarship program that they have is a way to find ways to fund your education. And lastly, online search engines that help aggregate scholarship offerings. And basically what they do is they allow users to be matched to scholarships based on a personal profile that you create. And so essentially this online search engine, it is essentially kind of a central repository of where information about various different scholarships can be housed, and it allows individuals to come along and build a personal profile based on their hobbies, interests, organizations that they belong to, and the search engine will essentially go out there and look for scholarships that best meet the profile of that individual. You may say, okay, well, where are some of these scholarship search engines? Well, here's some of you for you to think about. Provident Credit Union, in part with Sallie Mae, we have a free access to various different scholarships for both undergraduate and graduate students located here at the website below, providentcu.org/student loan. Scroll down and you will find a link to an online search engine that is powered by Sallie Mae, provided by Provident. You can also see that FastWeb, CapEx, and Big Future, which are some very popular scholarship search engines out there. You can certainly take a look at them and see if there's various different ways that you might want to build a profile and peruse some of the scholarships that they offer as well. But basically, a search engine is just that. It allows for you to look at a myriad of different scholarships. If you decide to move forward with a profile, it can actually specify those scholarships based on the information you put in the profile. And when you do that and you find the scholarships that best meet your skills, your hobbies, your interests, your organizations that you belong to, the theory behind that is that you'll have a better chance of winning that scholarship. So after scholarships have been researched and you are applying for those, and again, you know, hopefully you will be looking for scholarships and be interested in scholarships, not only before you actually start into your higher education career, but all throughout during your higher education career. But in the meantime, you also want to be looking at or taking interest in the federal application for federal student aid, which is the FAFSA. It is a free document. It's provided by the federal government. And the idea and the premise behind the FAFSA is what it tries to do is create a needs analysis. The needs analysis is a document or a number or a figure that is essentially used by financial aid offices to help calculate your financial aid offer. The FAFSA is typically available October 1st of each year. However, we are in kind of an update year where the FAFSA is going through a major renovation. The federal government has already mentioned that the FAFSA will be delayed until December of 2023. We don't have a specific day yet. But the FAFSA will be delayed this one time this year, 2023, until December. But after that, after we get past this, each and every October 1st, the FAFSA is available. Now, the FAFSA takes a look at 2 years, roughly, give or take, 2 years previous tax returns. So when you, if you are going to move forward in filing the FAFSA, the academic year 23-24 FAFSA, which again is available in December of 2023, you will need to have information regarding your 2021 tax returns. The idea behind that is that when you fill out the FAFSA and you put in your demographic information like your name and some other pertinent information, age and whatnot, you're going to have the ability to link your taxes to the FAFSA so that the federal processor can create what is going to essentially be a needs analysis number that they will then send to the various different colleges and universities that you are interested in so that they can start using that number along with the cost of attendance to help build a financial aid offer. The reason why they need that needs analysis document is that there's a lot of financial aid that's available both at the federal as well as state and institutional levels that are based either in part or totally on need. The way that they establish what that need is through this needs analysis document called the FAFSA, the Federal Free Application for Federal Student Aid. There are some state grants available out there, in part the Cal Grant, for instance, that use a portion of the information from the FAFSA to award the state Cal Grants. So from that standpoint, even if you may not potentially be interested in federal gift aid or grant aid, understand that the state grants will use a portion of the FAFSA information as well. And if you happen to have questions in regards to who can file the FAFSA, whether there's citizen requirements and such, typically you have to be a U.S. citizen or U.S. permanent resident to file the FAFSA. However, for the various different Cal Grants that are available, you do not necessarily have to prove residency. So CSAC, or if you Google Cal Grants, for instance, there is an application process for those that have questions in regards to residency and whether or not you're eligible for them. So let's go ahead and dive into exploring student loans. So after you file the FAFSA and the financial aid office has received that information and you've applied for your scholarships and maybe you've already heard back from some, or maybe you're waiting to hear back on whether you've won a scholarship or not. In the meantime, what will happen is the financial aid office will be building a financial aid offer for you, and they will start with the free aid first, like we mentioned, the grants, but then they will typically move on to taking a look at your eligibility for federal direct student loans. And again, you need to fill out the FAFSA to be eligible for these loans. The direct student loan program is one of the most widely used student loan programs out there. It comes in two forms. It comes in the subsidized form as well as the unsubsidized unsubsidized form. Now, both loan program types are essentially the same with a couple of small differences. The direct student loans, or for both loans, actually, I should mention, they're available to eligible undergraduate students that demonstrate financial need. And so basically, you need to have a FAFSA filled out, and you need to have some sort of a number, expected family contribution is what it's going to be called this year, and it will be moving to a different acronym or a different name for next year. But for this current year that we're in, the expected family contribution is that needs analysis number that's created by the FAFSA. You need to have a number created so that they can determine your eligibility for direct student loans. Now, the subsidized student loan is a need-based loan. You need to have some sort of need to be eligible for it. So again, going back to that first slide where we had the 4 quadrants of the various different costs of attendances for the various different universities out there. If you, again, for the community college number, for instance, was $19,230. If your expected family contribution is under that, then you have essentially need. If your expected family contribution is over that or so, then you would not necessarily have need. That's one simple way just to kind of show what need is. But the idea behind it is that a subsidized loan is available for students that have need and they've demonstrated need. And the unsubsidized loan is going to be for those that don't necessarily have need, or if they still have need after the subsidized loan has been awarded and they still have eligibility for it, you can receive a portion of unsubsidized loan as well. The nice thing about the subsidized loans is, as well as the unsubsidized loans, is that they both have fixed interest rates, but the interest is paid on the federal student loan subsidized portion while you're in an eligible deferment. In-school deferment is essentially that. While you're in school, at least half-time status, the federal government is responsible for paying the interest on your subsidized loan. Unsubsidized loans, again, are non-need based, and you are responsible for the interest the whole entire time that you have the unsubsidized loan. So from that standpoint, all throughout school, all throughout eligible deferments, as well as in principal and interest payments until the loan is paid off or forgiven. You can see here that with both the federal directed subsidized and unsubsidized loans, the undergraduate borrowing limits are as such. You do, again, need the FAFSA required in order to be eligible for them. There are 6-month grace periods on these loans. So essentially, if you happen to leave school, either through graduation or maybe you've dropped less than half time, or you've just simply left school, you have had to take a leave of absence, for instance, you will start into a grace period. And the grace period essentially is a period of time that you do not have to make payments on the loan. If you decide to go back to school or you increase your credits up to halftime status or above, and you do go back to school within that 6-month grace period, then you will be considered in school again. You will, if you have loans, they can be deferred while you're in school. If you have the subsidized portion of your loan available to you, the government will go back to paying the subsidization on that loan. And you will still have your 6-month grace period available to you if in which you leave school again, either through graduation or have to take another leave of absence. You have repayment options of up to 10 to 25 years. There are a tremendous amount of various different deferment options available. So once you actually have left school, and of course you will be in the most popular deferment available at that time called the in-school deferment, but there are various different economic hardship deferments. There's a military deferment available, various different ways that can help defer payments while you are mitigating something in your life. And again, that can either be an economic hardship deferment or it could be potentially active duty military deferment or so, if in the event that you get called for a particular conflict. You can see that the interest rates for this upcoming year starting July 1st are going to be 5.5% fixed on both loans. They do have an origination fee of 1.057. So you can see there in your first year, you borrow $5,500, you will receive $5,500 minus 1.057% of that loan. And that loan goes to the federal government, or that percentage goes to the federal government directly. So we talked about the most popular student loan available out there, but there are loans that are going to be available for parents of dependent students. And that is going to be called the Federal Direct Parent Plus Loan. Now, the Federal Direct Parent Plus Loan works a little different. You do need to have a FAFSA required, but the parent is going to be the borrower on this loan, and it's going to be on behalf of the student. But it is a loan that is going to be in the parent's name. Okay. Again, though, there's going to be requirements of the student to be eligible for this. You are going to have to be enrolled at least half-time and eligible for federal student aid, essentially. You typically will have a 10-year repayment on this note or on this loan. The maximum loan amount is going to be the cost of attendance minus any other financial aid received. So again, your cost of attendance were, estimates were of those 4 quadrants. You've take that number, and if your son or daughter or your dependent has received any other type of financial aid, whether that be a grant or a scholarship or a direct loan, for instance, you subtract all of that from the cost of attendance, and anything that's left over, you could borrow under the Federal Direct Plus loan if you need to. Now, we always request that students and families take a look at what they think that they're going to need to borrow, and be as prudent as possible and try and minimize the amount of loan that you need to take out. This is a process you're going to be doing every year that you're in school. And so essentially, if you're borrowing for the first year as a first-year freshman student, the chances are that you will possibly have to be borrowing for the remainder of the time that you're in college. So by being prudent and minimizing the amount of debt that you take out at the beginning will help you on the back end mitigate as much money as you have to pay back when you actually start into principal and interest payments. If by chance a parent applies for this loan, now there will be what is called a soft credit pull. They're doing a credit worthiness check on this, as opposed to with the direct loans for students that we talked about, where you just simply need to file the FAFSA and be in good standing, not have any debts owed on a federal student loan or any other type of federal aid. With the Federal Direct Parent Plus loan, there is a credit worthiness check. If by chance a parent does not qualify for a loan, they can look at maybe having some assistance in the application of the process, like through a co-signer, essentially. But they also can look and see that their student will be available and eligible for up to an additional $4,000 unsubsidized loan. So sometimes parents, if you think that your student would not be able to attend school because you don't qualify for a Federal Direct Parent Plus loan and you need that in order to help pay the debt at your school, sometimes there are remedies available for the student, as in this additional $4,000 unsubsidized loan. So you can see here that for graduate students, for any of those that are on the call tonight or today that happen to be looking at graduate school, you can see that the Federal Direct Unsubsidized Loan, as well as a Grad Plus, and we'll talk about that here in a second, are available for students that are enrolled in graduate programs at least half-time. You can see what's missing on this chart, however, though, is a federal subsidized student loan. For graduate students, the federal subsidized direct loan is not available. You are eligible for Federal Direct Unsubsidized Loan, and it has all of the same type of provisions that we've talked about. However, there are going to be different aggregate amounts that you can take overall, as well as different yearly amounts. It does increase, and essentially it helps kind of offset some of the costs of the increase in tuition and charges that you typically see with graduate programs. But the Federal Direct Unsubsidized Loan is available to you. The Graduate Plus loan is very similar to the Parent Plus loan, but because you are now considered an independent student when you're attending graduate school, the Graduate Plus loan is available for you as a graduate student in your name. Graduate students typically do not need information about their parents unless you happen to be pursuing certain types of health profession degrees. But basically, the Graduate Plus loan is available to you. It has the same type of qualifications. It's a loan that you can receive up to cost of attendance minus any other financial aid that you've received, and that includes the Federal Direct Unsubsidized Loan. It has a 20-year term that it can be paid back on. And again, you have a credit worthiness check. There's not necessarily going to be, so it's essentially is what we would consider a soft credit pull. But you can take a look for that Graduate Plus loan and see if this is an option that you want for your graduate programs. And it can be awarded to you as a subsidy or in addition to the federal direct unsubsidized loan to help meet all of your gap financing costs. Another option that you might potentially have both at the undergraduate and the graduate level is with private student loans. And you can see here, basically, private student loans are going to be the loans that are funded by banks and credit unions, as well as other financial institutions. And they're going to be typically based on the credit of the applicant and or a cosigner. The nice thing about private student loans is that the FAFSA is not required. So for those that may have trouble either filing the FAFSA or can't file the FAFSA or don't feel like filing the FAFSA, there are still funding options available for you out there in the form of private student loans. If you are an undergraduate student, the borrower would be the student. They may potentially need a cosigner. There are some private student loan programs out there that don't require cosigners. Some of them say that even though they don't require a cosigner, you might want to consider it for various different reasons. Sometimes maybe to qualify for a better rate or something like that. But because these are provided by banks and credit unions, each of them can have their own stipulations for application process. So basically, the private student loans will be taken out in the student's name. And again, if a parent wants to help, maybe the parent is not feeling like they want to take out a Parent Plus loan that's going to be solely in their name, parents can consider maybe possibly being the cosigner on their son or daughter's private student loan. This way here, the loan is in the student's name. There might be various different cosigner release processes later on in life that by which the parent might be potentially dropped from the loan or released from the loan. And sometimes that might be a decision as to why parents or families may want to go the private student loan route. If by chance parents do not want to take out the federal Plus loan, there are some lenders out there that offer a private parent loan. And again, this is going to be in the name of the parent or any other credit-worthy borrower. It could be an aunt, it could be an uncle, it could be a really close friend. Even though these are called private parent loans, really what it is it's a private sponsor loan. So essentially somebody that really believes in the undergraduate student or the graduate student's pursuit of higher education and want to help borrow a loan for them to help make their way through school. Private student loans typically can have repayment periods that range anywhere from 5 to 20 years. They offer a variety of in-school repayment options. Sometimes you can find lenders that offer deferred repayment. So basically where you can pay the entire amount of the loan off at a later time. They may offer fixed repayments, so where you just make a small monthly payment. What it does is help establish good repayment habits, but hopefully is low enough so that it's not interfering with your income or reduced income while you're attending college. And sometimes, private student loan lenders can offer what is called an interest repayment. So essentially where you just pay the interest on the loan while you're attending school. And the idea and the premise behind that is that the more that you can pay on the loan while you're in school, the less you'll have to pay when you graduate, as well as offset any type of interest capitalization or minimize any interest capitalization that happens on the back end of the loan. There are some lenders out there are some lender programs, however, though, that do offer or do require immediate repayment. So when you borrow the loan, you have to start repaying back immediately or very soon after. Because these loans are offered by various different banks and credit unions and other financial institutions, you essentially have to shop and make sure that you understand the different repayment rules and requirements and various different options that they have that are available to you. Again, we'll talk a little bit about cosigners and how they help may increase the chance of approval, or they may help get a better rate. You know, we're all seeing things going on in the financial world right now. This may potentially be an option or a need for a student out there, or for families that are looking at financing college for someone in the family. You may potentially need to have a cosigner. So that's something to kind of think about when you're thinking of these types of loans. And again, as we mentioned, the various different interest rates, the various different costs, whether or not there potentially are any fees or anything like that, will all vary based on the specific bank, credit union, or financial institution that's offering the loan. You can see down here in the bottom left, private student loan APR rate example that you can see here. Basically, you can see that interest rates on private student and parent loans can vary anywhere from potentially 1.04% to 11.98% on a variable rate, as well as many lenders offer various different types of fixed rates, anywhere from 3.24 to 12.99% roughly. Most of the private student loans out there offer zero fees, which means that if you ask for $10,000, you get $10,000. So it's something to kind of consider when you're looking at the various different loan options that are available to you. As we mentioned before, many of the federal loan programs offer fixed rates, but the private student loans, because again, they're offered by banks, credit unions, and other financial institutions, may offer variable rates. So you have a choice there. If you feel that a variable rate is what's better for you, it's typically available in these types of programs. But yet, if you like the assurance of a fixed interest rate, it's usually available in most of these programs as well. So again, you may ask yourself, okay, well, what about interest rates and what about the origination fees? You can see here in this example, just so that you understand what origination fees are, origination fee is basically going to be the percentage of the fee that's deducted from a loan that helps offset the cost of administering and originating that loan. So for example, in the Parent Plus and as well as in the Graduate Plus loan, this program has a 4.228% origination fee. And you can see here, so if you apply for a $10,000 loan, the Federal Parent Plus and Grad Plus loan programs are going to reduce that loan amount by $422.80 for administrative costs. So the amount that is actually sent to the school for your educational expenses is going to be $9,577.20. Whereas if a student decides to go with maybe, let's say, a private loan, for instance, and the lender is offering zero fees, if you ask for $10,000, you can see that $10,000 is what is received at the school. So here's kind of a way to kind of think about some of the repayment options on private student loans, because again, there are various different ways that you can enter into repayment while you're in school. You can do in-school monthly payments, you can do post-school payments, you can maybe look at deferring your loans, you can have fixed interest rates. You can see that obviously down in the graph at the bottom, there's various different ways that you can kind of save on your student loans while you're in school, long before you're making principal and interest payments. The graph at the bottom will show a deferred repayment option on a $10,000 loan. So basically, the student has applied for a private student loan. They've been assigned a interest rate that equates to an APR of 4.56%. They've decided not to make any payments in school. You can see that the post-school payment, or basically when they've left school, when they start into repayment, will be $125.38. They'll be paying that off for 120 months or 10 years. And the total amount paid is $15,032.77. The bottom number there, the bottom line, will show that the interest repayment option, if a student has decided that they want to make the interest payments while in school, many lenders will typically offer a reduced interest rate or a reduction in their interest rate or some sort of an incentive for doing that. So you can see here in this particular example, we've taken that into account, and this particular lender has decided to offer an APR or an interest rate that equates to an APR of 3.75%. They are making a $31.25 payment on a $10,000 loan. They're making a $31.25 interest payment per month. when they start into principal and interest payments at the end of school or post-school payment, you'll see that their payment per month is only now $100.21. They're still paying the loan off over 10 years or 120 months. But you will see that the total amount paid over time will only be $13,548.73, roughly $1,500 in savings by taking care of the interest while they were in school. By taking care of the interest, you are also offsetting any potential interest capitalization, which is essentially paying interest on top of interest on the loan when you decide not to make payments on your loan, while you're in school. So things to consider when you're shopping for education loans, okay? Consider your financial situation, consider the types of interest rates, the benefit programs offered. So again, if you're looking at federal loans, there are certain things that can be offered to you. When you're looking at private student loans, there may be various different benefit programs. We mentioned the interest rate reduction if you decide to go and pay the interest while you're in school. Maybe there may be ACH, or if you sign up for auto pay on your loans, there might be a benefit available there too as well. Take a look at some of the other features if you're looking at loans. Like we said, the repayment terms, if there's any fees, is a cosigner release available. So therefore, if you do decide to take out a loan and maybe through the application process, it's determined you need a cosigner or want a cosigner, sometimes that conversation might be difficult. Finding a cosigner by letting them know that there's a cosigner release available might be something that allows for a cosigner to sign on to that loan. And once it's demonstrated that the student or the borrower can manage that loan on their own, the cosigner can apply for a release, as well as look at maybe potential death or disability waivers. If, for instance, in the unforeseen and unfortunate turn of events where there's an applicable person on a loan that happens to pass away or be totally or permanently disabled, what are some of the features that can help offset the mitigation of the repayment of that loan? So lastly, how to fund the repayment, the remaining balance. We want to make sure that you're aware of the various different tuition repayment plans that are available from schools. This will be based on the various different schools options, on the various different types of repayment plans that you have available to, or payment plans that you have available to you. It's something that you may want to inquire and just use in your examples of various different choices you have to help fund the GAP program. Take a look at what some of the times the monthly dollar amount payment might be, and take a look at, see if there's any types of fees or charges to be a part of the tuition payment plan. But it's certainly an option that you can consider moving forward with that GAP financing. Sometimes parents or families might want to consider looking at 401k plans. You can see some of the pros and cons of using a 401k plan. Now, again, we're not a financial planner, so these are just some things to kind of consider. If this is something that you want to take a look at in depth more after this, consider talking with a financial planner or a tax advisor on this. But sometimes 401k plans are attractive because of easy access, and you essentially have, you're borrowing against what you've already allocated to your 401k plan. But understand there may be potential tax implications. There might be loss of future growth. There may be some early withdrawal penalties that come with that. Long-term investments such as stocks, bonds, mutual funds, college financing plans like 529 plans, or maybe some prepaid tuition payment plans. Again, they operate very similar to 401ks. You may want to think about the pros of being easy access. There's little to no credit check or any type of lengthy applications. But again, you may be borrowing against your future retirement earnings, and you may stunt or slow down future growth in these types of investments. And remember, you may have potentially bought some of these investments like a stock or so at a higher rate, and now you're having to liquidate it at a lower rate, and so therefore you might be selling it at a loss. Home equity lines of credit, again, are very similar in that you're borrowing against equity against your home. There's typically easy access for this, but remember, though, that especially in this transient world that we're in, where all of a sudden we may potentially have to pack up and move, sometimes you may need to pay this home equity line of credit off before you can put your house up for sale. If in the unfortunate situation happens where you've borrowed a home equity line of credit for educational expenses, and then something happens to your home that is not covered by insurance or other means, you may potentially not have the home equity line of credit available to help pay for those future repairs or improvements. And also too, there may be potential closing costs that apply to these. So again, something to consider. Credit cards. This is something that, we would want students and families of students to kind of think about first as well. Credit cards are great because you can just simply walk in and you can scan your card and the payment's done. It's very fast and you're done. However, remember though that many credit cards will have card limits. And so this is not necessarily, it may be a short-term fix to a long-term problem that you need to utilize over many terms or many years of school. And if you max out your credit card in your first term or second term, you may not have this available for you in the future. Credit cards, because of interest rates and such and the types of charges that are put on credit cards, this might be one of the most expensive ways to go. And understand too that credit cards typically will have some sort of a processing fee at the college or university that you're trying to use this at, anywhere from 1.5% to maybe 4.5% processing fee that is added on the large dollar amount that you potentially are paying off on your credit card. So you'll have to figure that into the amount that you will eventually have to pay back to at a later time. So tips and recommendations, okay? Parents should always put a checklist together, make a plan to who is going to help pay for college. If it's the student's responsibility entirely, if the family's coming together to help put a plan together to put the student through college. Using your research, we talked, the financial aid offices are going to put together for you, based on the FAFSA information, eligibility for your federal grants, your state grants, as well as your federal direct student loans. So, spend your time looking for scholarships, utilizing free tools, and thinking about your gap financing options, like whether you might potentially look at a Parent Plus loan, private student loans, tuition payment plans, or other types of funding sources. Okay. Anytime that you need help, school financial aid counselors, school admission counselors, as well as your high school college counselor or so, if you happen to be in high school. All of these are available resources to you to ask more or additional questions. And if they don't have the answers available for you, typically they know how to find those answers for you as well. So definitely utilize them. This is going to be a major investment in your life, and make sure that you have answers to all the questions that you have before you enter into anything. The most informed person is going to make the best choices, and they're going to be the happiest with those choices typically. So definitely ask the questions. These offices and these resources are available for you. Again, evaluating your options. There's various different options, whatever works best for you, the savings, interest rates, flexibility. Make sure you understand who's paying and various different financing options that you have available to you. Evaluate them all, think about them, put a plan together early enough so that you can analyze this and make sure that you make any changes and such before the first day of school. To find out more information about financial wellness, as well as college financing and college planning resources, definitely visit the website provided to you on this page, providencecu.enrich.org. There's a lot more resources available for you on this. And I know that Provident has also got branches that are available that can help facilitate answering any questions that you have, as well as any type of financial planning questions that you might have, especially when talking about other types of gap financing options.